The UK property market is in a very weird situation right now. Rightmove has reported that there's been a 14% increase in sales listings this year, whilst there only being a 5% increase in sales actually being agreed. Landlords are selling up in their masses, and for the first time, buyers have more leverage than the sellers due to there being such an excess supply of properties for sale. There's listings sitting on the market for months without a single offer, and vendors are being forced to reduce their price just to try and make a sale happen. But in this video, I want to break down what this all means for your average property investor and how does this affect the average person that doesn't really have anything to do with property at all. So first things first, let's start with housing prices. They look pretty stable, right? This is how they look when you adjust them for inflation. In fact, since 2021, technically that's a 17% drop when adjusted for inflation. Now, technically on paper, the housing prices are stagnant. There's not a big boom, there's not a big fall or a big crash, as people like to call it. They're stable. But when you adjust them for inflation, it's really not performing that well. A couple of reasons for this are the rising interest rates back in 2020, 2021. The interest rates were a lot lower than what they are now at around 4 to 5%. Second reason, it's harder for the average person to get a mortgage. Obviously, back in the day, the average salary versus the average house price, it was only a 4 times difference, right? Your average house price was roughly 4 times the average salary. Well, nowadays, it's a lot higher. And additionally, normal everyday people who can actually afford a mortgage are still being rejected for mortgages simply due to the fact that lenders are being extremely selective and doing very tough stress testing on people who can reasonably afford a mortgage, yet when they go through the lender stress test, they get rejected. But the main reason is just basic economics. A lot more people are selling than actually buying. Now, if we look into why that is, there's 2 main reasons. Number one, 1.8 million homeowners in the United Kingdom are going to be coming off the fixed rate mortgages that they locked in back in 2020, 2021, where their rates were at 2% to 2.5%. They're now going to be coming off those rates to 4-5%. And a lot of people, unfortunately, just simply can't afford those rates. So just for some context, a property that costs £250,000 at a 2% interest rate would be costing you £950 a month for your mortgage. Now, if you come up to 4 to 5%, and it will now cost them £1,600 to £1,700 per month. So imagine your mortgages almost doubling. A lot of people aren't able to afford that, given the current cost of living crisis, which is forcing a lot of people to actually just suck it up and have to sell the property instead of dealing with these really high rates that they're just not going to be able to afford. Second is landlords being forced to sell due to things like Section 24, the new Renters' Right Bill coming in, or that's already coming, depending on when you're watching this video. The threats of further persecution on landlords, such as adding national insurance tax on small landlords that own property in their personal name. For a lot of landlords, there's no point in keeping their 1, 2 or 3 buy-to-let properties that they bought 15, 20 years ago in their personal name, because for most, they're barely breaking even, and for some, they're actually losing money because of all of these legislation changes. So why would you keep an asset that's costing you money when you bought it for it to make you money? And that's why we're seeing landlords selling in their droves because of all of these changes. And now the market is flooded with excess stock, but not enough buyer demand. And unfortunately, this comes at a time where all of the big corporations like BlackRock and Lloyds Bank are buying up whole streets and whole blocks and are becoming the biggest landlords in the UK, literally eliminating the small landlords that are working hard for their money, trying to invest into a couple of buy-to-let properties to provide a better future for themselves and for their family. So what does this mean for the average investor? Well, as sad as it is to say, Wherever there's crisis, there is opportunity for people who actually understand what's going on in the market and can identify problems that need to be solved. Firstly, because so many properties are now on the market being sold, because there are less landlords available, and because landlords are likely going to be passing down any further costs that they're going to incur, such as national insurance, down to the tenant, you're probably going to be seeing an increase in rental prices, because there's already, as it is, there's not enough supply of rental properties, number one. And number two, the demand is so high for rental properties that it's just going to keep pushing the price up, and landlords are going to be able to do that. Well, not in some instances, they may be forced to do that, otherwise they're not going to make any money at all. And number two, because there's just not enough supply and the demand is so high, the price is just going to be squeezed up. Now, for a lot of people, for the average person, it's a really bad situation because they're not going to be able to afford to rent a normal 1-bedroom, 2-bedroom flat, especially for younger people, which is why I personally think you're going to see an increase in people opting to live in shared accommodation, such as in a HMO, where you pay your rent, you don't have to pay council tax, you don't have to pay Wi-Fi, you don't have to pay water, gas, electric. All of the bills are covered in the rent, and it would make more sense economically and financially to choose that option where, okay, fine, you may have to share a couple of spaces like a kitchen or in some cases even a bathroom, but it's just a lot more financially viable. And for investors, it could be an opportunity to invest more into the HMO market. And the second thing that I think is going to happen, and to some extent that we've already started to see, is more and more distressed sales. As landlords are losing money every month from their property, as buyers who are coming out with the fixed rate mortgages are coming into higher interest rates that they simply cannot afford, we may see vendors willing to sell for less than what the property is actually worth because they have no other choice. They may be facing something like a threat of repossession, and because of that, they need to sell desperately and are willing to give a smart property investor a good discount just to get out of that pressure and that situation that they're in. And as unfortunate and as sad it is to say that, I think that is something that is definitely going to occur more just because people aren't going to be able to afford to pay their mortgages. The likelihood is a lot of other vendors, even though they may not be facing the threat of repossession, they may be sitting there getting tired of having their property listed for months and months with multiple different agents only to pretty much not get a single thing or get a few very lowball offers. And because of that, they may be willing to speak to an investor or a cash buying company and take a cash offer for a discount, but just sell the property and get out and move on because they're just so frustrated of trying to sell it on the open market at market value, or what is deemed as market value based on local comparables. So in conclusion, I wouldn't say that the property market is dead, but it's definitely in a place where a lot of people haven't really seen it in the past God knows how many years. And it just comes down to basic economics. There's less rental supply, so the rent prices are going higher. There's less buyers and more sales stock, so prices are being slashed on Rightmove and could lead to housing prices dropping a little bit overall. But if you're a savvy investor and if you're someone that can actually understand what's going on, there's definitely opportunity to make money. So if you've got some cash in the bank, you've been thinking about investing in some property, or you're already a property investor, click the link in our description, join our WhatsApp group. We post incredible property deals in there every single week. All you have to do is click that link. There's no fluff, there's no bullshit, just simple, amazing opportunities for you to invest your money into. Thanks for watching. Make sure you like and subscribe, and we'll see you in the next video.